Here to put the recent presidential election into perspective as it relates to our markets and economy is our chief equity strategist and economist, John Blank. So, John, the stock market rallied hard on the first trading day after the media called the president-elect, but COVID vaccine news also accompanied that rally. So, how much of the rally was actually related to the election?
I think, just to give levels, I think we started at 3250 on the S&P 500 at the election or pre to it, and I think people shorted down stocks into the election, and then they closed and covered. The shorts covered. So that took us to effectively, let's say 3250 to 3500 on the short covering. And then the vaccines took us up the other 100 points to, another 150 points to, 3650 where we topped out. And frankly, I think we have topped out and we will not go back up above that level in this year, next year for sure, but not this year.
So what do you see for our economy as it relates to the election?
The election effectively was, it was a referendum on COVID, Terry. And the unfortunate truth is that the change in the regime that will bring a new regime to deal with COVID is not going to be here for another 2 months. So we're still in a kind of a crazy quilt policy regime for the next 2 months, and that's kind of sideways to slightly negative for the economy. It's not clear what the stock market thinks because the stock market is looking further ahead than the next 2 months.
Is that the same situation for the global markets and global economy?
Pretty much, Terry. I think that's something people got to think about, and it's a good part of this podcast, since we're talking about global markets, is that Europe certainly is in a tougher lockdown situation than the United States, and is certainly going to see more pull downs. And a lot of the bid on stocks is being centered in low virus count areas like Australia, or in Asia, even including China, where they have this situation under better control. So the bottom line is, if you look at international stocks, look to the lower virus counts and only play in bull cases where virus counts are under control.
The Q3 earnings season is going better than a lot of the covering analysts had expected. What does that say relative to sectors going into year's end, especially retail?
Well, Terry, this is 3Q. That ends the end of September, when the virus counts were lower in the United States. So it's basically backward looking, and it basically does not apply. And you should discount anything that's coming out of earnings because of the backward looking nature of the situation.
Let's look at the Zacks construction wood building products industry. You say that it's hot and the outperformance is nothing to sneeze at. What's driving that?
Yeah, this is house starts and permits going strong because, the Fed's got rates pinned down to zero basically till the end of 2022. You've got a demand stimulus coming from COVID where people want space to work remotely. So not only are they remodeling houses, buying computers to work remotely, but they're also just flat moving into suburban areas where there's more space to be away from other people. And this is the new reality. We don't know how much it will revert after it's over, but the truth is it got a lot of people off the sidelines into these houses, and the builders are making starts and permits, and that will and does trickle into the lumber businesses. And those three names I put up, Boise Cascade, Geldwen, and Blue Links, are names that people should know about, not only because they're getting a bid from the analysts and they're seeing a bid from the home builders, but they're also still pretty good values from a stock market perspective.
So is the industry overvalued, or is it close to being overvalued relative to its performance, especially since we move into the winter months when construction typically slows?
Yeah, in general, I would say that's the case. There's a seasonal tilt, but I think it's going to be dominated by the COVID trend. And a lot of these house builders are in the west and south of the country. So it's very hard to argue that this is not going to continue. I think people should stay with the bid.
All right. You want to look at these stocks individually? Blue Links Holdings, Boise Cascade, and Geldwen.
Yeah, Blue Links is a smaller cap company. They are a name, they're kind of like a Home Depot, but you probably don't know them. Boise Cascade, obviously, very old company, back to the lumber, boom barren days of the United States. Very interesting stock right now because it's kind of overlooked. Then Geldwin is basically windows and doors and frames and stuff. Again, that's a tighter fit to the housing start number. So of the three, I kind of like Geldwin the best.
All right, our chief equity strategist and economist, John Blank, giving us his market and economic perspective as they relate to current news and also highlighting the wood building products industry. With John, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.